Hello everyone. In today's video, we dive into the latest article by Dr. Turki Faisal Al Rasheed, published in Arab News, Trump's Debt Revolution, Birthing a Fairer U.S. or a Monster. Before we begin, let me introduce the author, Dr. Turki Faisal Al Rasheed, a Saudi businessman, academic, and thought leader. As an adjunct professor at the University of Arizona and advisor, American University of Beirut, Faculty of Food and Agricultural, and founder of Golden Grass Inc., he brings a rare blend of vision, expertise, and real-world insight to every article he writes. Dr. Al Rasheed is also a distinguished author. His upcoming book, Saudi Arabia, Transformation, Uncertainty, and Sustainability, explores the kingdom's evolving economic and social landscape amid global change, offering deep insights into development, resilience, and long-term sustainability.
All right, let's get right into it. Just 1 year into a second Trump administration, America is being shaken by a really bold and, let's be honest, controversial new policy that's targeting the very heart of the American wallet. Today, we're breaking down this audacious plan to cap all credit card interest rates at just 10%. Yep, you heard that right.
You know, there's an old proverb that says, "You can stretch your legs as far as the blanket goes." It's a simple lesson about limits, and it perfectly sets the stage for what's become a huge national debate on debt, fairness, and the very structure of our financial system.
And that's really the core question we're tackling here. Is this proposed cap a much-needed lifeline for millions of people who are practically drowning in debt? Or is it a reckless move that could cripple America's entire financial engine? Okay, let's dive in. So what exactly is on the table? Well, this proposal is a direct, almost defiant strike against high-interest credit. Let's take a look at the numbers to see what this really means. Right now, if you're carrying a balance on your credit card, and let's face it, many of us are, the average annual percentage rate, or APR, is sitting at a staggering 22.3%. That's a huge chunk of your money going straight to the banks every single year. Now here's the proposal. A 1-year mandatory freeze, capping that rate at a maximum of just 10%. The difference here is absolutely massive. To really put that in perspective, we are talking about cutting the average interest rate by more than half. For a family with thousands in credit card debt, that could mean immediate, significant, maybe even life-changing savings. And you should know, this isn't just some dry policy debate, it's being framed as a full-blown populist crusade. On his Truth Social platform, Trump has painted this as a fight against what he calls predatory lending, basically casting himself as the champion for families getting squeezed. So, what's the case for this cap? Well, supporters argue it's an emergency intervention for an economy where millions are just struggling to stay afloat.
Let's start with the sheer scale of the problem. Get this, as of 2025, Americans are carrying over $1.1 trillion in credit card debt alone. That's trillion with a T. It's a mind-boggling number just hanging over the country's households.
But why are people in so much debt? The reasons might actually surprise you. We're not talking about frivolous spending here. For most people, it's a matter of survival. Things like covering a sudden medical bill, fixing the car you absolutely need to get to work, or simply buying groceries when wages haven't kept up with inflation. But as you can imagine, Wall Street sees this very, very differently. For them, this isn't a lifeline. It's a potential catastrophe. So let's flip the coin and look at their side of this.
This quote from Bank of America's CEO really gets right to the heart of the banking industry's fear. They warned that forcing rates down this low would lead to a massive credit crunch, which would make it harder for just about everyone to get a loan. Now, to understand their argument, you have to look at why credit card rates are so high in the first place. See, they're what's called unsecured loans. Unlike a mortgage, there's no house to repossess if you default. So the banks argue that higher interest rates aren't just for profit. They're a necessary tool to manage the risk that, 3 to 5% of borrowers just won't pay them back. And here's the bank's doomsday scenario, all laid out. They claim that with a 10% cap, a whopping 80% of their existing credit card accounts would instantly become unprofitable, like overnight. To survive, they say they'd have to cut off credit or impose a bunch of hefty new fees. And the potential damage doesn't stop with individual accounts. Consumer spending is the engine of the U.S. economy. We're talking 70% of GDP. So if you choke off the credit that fuels that spending, critics warn you could stall the entire economy and maybe even trigger a recession.
But this is so much more than a debate about numbers on a spreadsheet. It's a fundamental clash of worldviews. To truly understand the populist anger that's driving this proposal, the source material argues we need to step back and look at a deeper, philosophical critique of modern capitalism. You might remember this from a psychology class somewhere along the way. Maslow's hierarchy of needs. The idea is that humans are always trying to move up this pyramid, from basic survival to higher goals like creativity and self-fulfillment. But the argument here is that our buy now, pay later culture completely subverts this. Endless debt essentially flattens the pyramid, trapping people at the very bottom, stuck in a constant, frantic scramble just to make their interest payments, with no energy left for anything more.
And this is the economic backdrop that gives this whole populist crusade its power. This data from Oxfam is pretty shocking. It shows that since 1989, the richest 1% have accumulated wealth nearly 1,000 times faster than the poorest 20%. This incredible disparity is what fuels that feeling that the whole system is rigged.
Which brings us right back to the central conflict, with that January 20th Inauguration Day deadline for compliance looming large over everyone. So we're left with two starkly different potential futures. Is this a path to justice that could free a generation from the chains of debt? Or is it a path to jeopardy, one that could rouse an economic monster and destabilize the entire system?
The answer remains totally unknown. As the source material puts it, the inauguration bell is tolling and the whole world, along with every single American wallet, is waiting to find out which one it will be. Justice or jeopardy?
Conclusion. As we conclude this discussion, we return to the vision expressed by Dr. Turki Faisal Al Rasheed, a vision rooted in clarity, innovation, and a deep commitment to shaping a more stable and interconnected future. For the full article, you can find the complete details in the description below, or visit www.arabnews.com. And if you need it full story about and to learn more about the author, visit www.frasheed.org. If this video gave you insight or inspired your thinking, don't forget to like, share, and subscribe for more discussions like this. Thank you for watching. Stay informed, stay curious, and see you in the next video.